Tesla stock is currently up almost 6% at the time of recording this video on big news. The Trump transition team is reportedly looking for policy leaders for the Transportation Department to develop a federal regulatory framework for self-driving vehicles, according to Bloomberg. They include Emil Michael, a former Uber executive, Republican Representative Sam Graves of Missouri, and Garrett Graves of Louisiana. And it looks like the framework for actually launching full self-driving, some of the regulatory requirements may be eased up a bit, and that is to Tesla's benefit more than anyone else. And this is really one of the first things that is likely going to help Tesla. It's a sign that Elon and Trump's relationship is actually going to be a beneficial one to Tesla. There was a lot of fears last week that removing the $7,500 tax credit may not be a good thing for Tesla, that maybe Trump and Elon's relationship is only going to go so far, and there's only going to be minor, maybe, improvements to Tesla from this. Today, it's becoming even more clear for anyone that was in the dark before that Trump and Elon's relationship is very much a positive to Tesla. And in terms of catalysts that move Tesla stock, there is nothing bigger than AI and full self-driving, and ultimately robotaxis. But it doesn't just stop there, because we have a lot of other big news as well, and today is a very big news day for Tesla. Naomi Seibert on X says, "We need big Teslas for big families," and basically says that we should have a 3-row vehicle that Tesla manufactures. And Elon Musk presumably agrees to this by saying, okay. Sawyer Merritt says, "One market I think Tesla would do very well in is an affordable 3-row SUV that's about 200 inches long. I understand that the Cybercab is the future and most people will use that. But that doesn't mean a 3-row SUV couldn't be a success. A more spacious, boxy SUV offering greater cargo capacity is something that I hear a lot of people asking for. Robovan is still many years away and very big. I sat in it at the event. It's awesome, but it will likely be mainly used for public transportation in cities and densely populated areas." It's also being reported today that Tesla has lowered the Model Y's starting lease price in the US to $299 a month from $349 a month, the same exact starting lease price as the Model 3. And you have now actually seen the starting lease price per month in August at $489 a month, now at $299 a month. That's actually a reduction of 39% with the same exact down payment. So Tesla is likely working out some pretty good deals with the banks that they work with to offer these lower lease starting prices. Hopefully it's not margin negative, and that's yet to be known. RBC Capital says federal deregulation on autonomous vehicles would be a bigger positive than eliminating the $7,500 credit would be. And Morgan Stanley's Adam Jonas says pretty much the same thing, that he believes Tesla losing the $7,500 EV credit in the US might already be priced into the stock, but that the company's leadership in embodied AI and autonomous technology and potential policy accelerants may not be. And I mean, that's pretty clear at this point. Tesla stock really is not pricing in a robotaxi network. It's really not pricing in Optimus at scale. Like, you're not pricing these things in really at all. You're pricing in 20 to 30% faster deliveries next year and hopefully a margin outlook that improves. That's what Tesla has priced in recently. If we start to price in a larger, faster rollout of the robotaxi network, there is a lot of room for upside in Tesla stock. Rabbi S. Litvin on X responds to Elon Musk's post and where Elon says, "Instead of teaching fear of pregnancy, we should teach fear of childlessness." And a rabbi here says, "I'm working on it, Elon Musk. Now please make a Tesla big enough for my family." Elon Musk says, "That's great to see. Tesla Robovan is in development. Some other things too," alluding to potentially a larger 3-row SUV. Again, this would be another untapped area for Tesla. Yes, you have the Model X that can seat up to 7 people, but when your family's this large, a Model X just doesn't get the job done. And I like to think about everything in terms of a TAM, right? Total addressable market. For a family like that, Tesla has no TAM for them. There's no market for them because their family is just so large. That's why I'm excited about the semi-truck, because that's a totally new market. If Tesla does introduce something like an SUV, right, like a Suburban or something, the equivalent, right, of a Suburban in a Tesla product, that's going to open up a whole new market for Tesla. And that's really what Tesla needs at this point to continue to drive 20-30% delivery growth year after year. Barclays has increased their Tesla price target to $270 per share from $235 per share and keeps an equal weight rating on the shares. And easy come, easy go, the Tesla bot action figure went back in stock 11 hours ago, and 1 hour later it was out of stock again. Option activity for Tesla stock today from hedge funds and institutions specifically is very positive. You have 247 different trades totaling $262.87 million with a positive order value of 93%. 93%. That's insane. That almost doesn't make sense if you think about what options are actually used for, okay? Options are used as protection, a way of leveraging a position. You can think about it like this. If you're short 100 shares in Tesla, instead of buying, let's say, 200 shares of Tesla, if you want to be net long, maybe 100 shares, have a little bit of downside protection, you can go out and buy 2 options to the upside. It doesn't seem like options are being used in an upside leveraged way to leverage an existing position or being used as a downside hedge at this point. It looks like hedge funds and institutions are using Tesla options to be more speculative, right? 93% positive order value. That is a great sign. Now, you might hear the word speculative and say, oh, that doesn't sound great. But it's actually a good sign. It is. 93% positive order value. That means out of 100, let's say, trades going into Tesla, 93% of them are positive. 7 are negative. That's an incredible ratio and is likely a testament to Tesla stock continuing this upside momentum. Again, over the past week, you have seen 2,911 different orders totaling $2.27 million with a positive order value of 77%, which is still a very good number. On Friday, you had a positive order value of 74% with 320 trades totaling about $200 million. So definitely can't complain too much with what we're seeing there in terms of options. Short interest of free float sitting at 2.8%. You have $25.05 billion currently sold short in Tesla, totaling 78.11 million shares. If you take a look at what's going on with the shares today, what's being borrowed and returned, you have borrowed shares of 1.41 million, returned shares 922,000. That means you're actually seeing potentially up to 500,000 shares that are being sold short today. So even though you have this net selling pressure versus covering, I think it's really a lot of the options that is pushing Tesla higher. Tesla and Nvidia are consistently number 1 and number 2 most traded options on any given stock, right? And they kind of go back and forth. Sometimes Tesla's number 1, sometimes, Nvidia's number 1, but they're both number 1 and number 2 on any given day. And when you get this swing of optimism in Tesla with options, it seems like options carry the way first. And then by the time shorts are covering, things are going parabolic for Tesla. And I don't think we're at this moment just yet where things have gone parabolic, where we've seen that overextended large upside. I do think if we get back to that 360 level and then we go parabolic, potentially pushing the 450s all-time highs, that's where a lot of the shorts are going to start to cover in between that range. And I don't think we're there yet, but we're certainly on the path to get to more euphoric kind of situations for Tesla. Sentiment for Tesla today is neutral at 47. Yesterday, you were bullish at 56. So this is actually a good sign that you are seeing sentiment not super ecstatic for Tesla. That does at least signal to me there's more room for people to get more bullish in Tesla. Message volume today is normal at 51. Yesterday was low at 36. Again, that's a great sign. You don't want to see these metrics too high because they can only go so high, right? So there's more room to move higher if these numbers are at a lower point. Participation ratio is high today, which is what you want to see. It's coming in at 57. That just means there's more accounts. There's more people over on StockTwits talking about Tesla instead of the same 20, 25 different accounts that post multiple messages, every couple of minutes. There's maybe hundreds of accounts talking about Tesla, posting a fewer amount of messages. Just means the participation is really broadening out in Tesla, and that is a good sign. Tesla continues to run about 4,000 different ads with Google. Global inventory numbers have recently fallen for the Model Y down to about 6,400. Same is true for the Model 3 down to 4,900, Model S at 4,800, and the Model S at about 3,000. The percent of stocks currently trading above their 50-day moving average is going up today to 55.37%, up 1.67% today. CNN's Fear and Greed Index is pretty much unchanged from Friday, going up 1 point. On Friday, you were at 50. Today, you were at 51. Market momentum is greed. Stock price strength, extreme fear. And this is the net new 52-week highs and lows on the New York Stock Exchange. So not a lot of new 52-week highs here today and really over the past couple of trading days. Stock price strength, extreme fear. Put and call options, neutral. Market volatility is neutral. Safe haven demand is greed, and junk bond demand is extreme greed. And back to Tesla just for a moment before we kind of expand into what's happening in the broader markets today. Google Trends data in the United States, which I think is the most important area to be watching right now, is continuing to grow larger. Cybertruck went from 32 to 37. The Model Y went from 23 to 29. The Model S from 18 to 24, and the Model S sitting here at 11, the Model X at 9. You're definitely seeing an uptrend in search trend activity in the United States, which is a great sign. Same is true for worldwide. Worldwide, Model Y went from 36 to 41, Model 3 from 31 to 35, the Model S and X staying at 14 and 9 respectively, and the Cybertruck is actually falling a little bit from 45 down to 42. So if you're betting on Tesla to have 500,000 plus deliveries in this quarter, I think it looks pretty good so far that we may actually achieve a really good number. In terms of the broader markets, the S&P is up almost 0.5%. Big tech is really leading the markets higher in some areas. Apple up almost 2%, Google up over 1%, Netflix up over 2%. Nvidia, that reports earnings this week, is down 1.5%, following news that we talked about yesterday that Nvidia's Blackwell chips are overheating. This caused the stock to sell off over 3% at one point today, and it's climbed back a little bit, but still trading negative about 1.5% on the day today. Michael Dell on X is reporting that Dell has actually taken delivery of the first Blackwell chips. So it doesn't seem like at least Dell is too concerned about the overheating problems that Blackwell has recently experienced. And I think this is kind of cushioning some of the bad news that we have seen around Blackwell over this weekend. And as you can see over here via Trend Spider on X, you've kind of broken down on Nvidia's chart today with the break under 140. If this holds, this could set us up for a retest of the 50-day moving average, potentially before Nvidia reports earnings Wednesday and after hours, which is around that 131, 132 level. And as we talked about on the earnings calendar, a lot of earnings have already been reported, but Nvidia is Wednesday and after hours. Others Wednesday and after hours include Snowflake, Palo Alto, Jack in the Box. Thursday, you have Intuit, Ross, NetApp, Baidu, John Deere, some others. Tomorrow morning, you have Walmart and Lowe's that report. Walmart is very important for the consumer. Back in 2007, from March to August, Walmart was warning about the consumer, warning about a slowdown, potential recession. Wall Street kind of blew it off. By September 18th, markets had hit a new high in the following 3 weeks after the Fed's 50 basis point rate cut. And then it all came full circle by the end of 2007, where Walmart was proven to be a pretty good bellwether of the economy. That's when the consumer started to really turn downwards. And by January or so of 2008, we were already in a recession. So I think Walmart is very important personally for me. I think it'll be important for the markets as well and how we trade. But if Walmart has good things to say about the consumer, I'm forced to be a little bit more positive on the economic outlook. Walmart is just that company that really can tell you more than any economic data coming from the government can. A lot of economic data is surveys and really lagged and BLS reports that are, I mean, like 30% of businesses actually report they're hiring and firing every month. Like, how accurate is that data? Probably not very accurate. Walmart, though, they see things in real time and they will give us an insight to the consumer. Now, expectations are high for Walmart. Walmart stock has done very well. So I think there is risk to the downside there. But the only thing that really matters in terms of the broader markets is, what do they say about the consumer? Do they say the consumer's doing fine, doing great, or do they give you a little bit of a warning? Same is true for Target and TJX, although they, at least Target tends to be higher end, and I don't think that'll be super important for the markets. But those are also names that report that are consumer oriented names Wednesday pre-market. So I actually think tomorrow morning is a pretty big catalyst for markets. Here on the day today, the Nasdaq is the outperforming index, up 0.65%. Russell 2000 is the second best performing index, up 0.46%. S&P up 0.43%, and the Dow is slightly in the red by about 1/10%. The VIX is also falling 3.6%, down to 15.56, which I do think is showing a little bit of complacency to the bull side. Everyone's kind of gotten a little bit too bullish, it feels like, over the last couple of weeks. And I don't think this will be sustained for a long period in time. It's hard to say when the shoe's going to drop, when things are going to get a little bit more bearish, when we potentially get a correction. But at some point in the next couple of months, it does seem like that will happen. And I guess in a little bit of a bad omen, we'll talk about this in the next video, but Mike Wilson with Morgan Stanley is finally bullish on stocks. This article says why the firm now sees 11% upside through 2025. They have a price target for the end of 2025 at 6,500 with a bull case scenario. Get this, over 7,000. Their bull case scenario is about 7,400 or so by the end of next year, if 10-year treasury yields do come down. And it does seem like one of those moments where all of the bears are just starting to throw in the towel. And that's normally not a great sign for continued returns. With that said, ladies and gentlemen, I will provide a more in-depth technical breakdown as well on Tesla in the next video. So stay tuned to the channel for that one, as well as a lot of other things that you need to know. So stay tuned, and I will see you in the next one. Until then, stay safe out there, and goodbye.